Hi, everybody. Hope you can hear me. So it's not just me. I've got a very power-packed panel with me. So, it's really titled the Masterminds Talk and partnership between fintechs and banks to fuel the growth of entrepreneurship and SMEs. Long title, but it could have been titled Boosting Business Growth with Banks and Fintechs as Partners. So I just want to first bring on board the panelists. Imane, Adel, EVP of Strategy for Paymob, please. Malik, Alyousef, CEO of Monz AI. Rohit, Garg, Group Head of Business Banking, Emirates NBD. Please. Mohammed Nana, Vice President, Fintech, Enabler and PSP Partnerships for EEMEA Mastercard. So we will have a quiz on what EEMEA stands for later. And last but not least, Gonçalo, Traquina, Partner in the Advisory Division, Head of Financial Services, KPMG. A quick intro, usually the panelists have to establish themselves and say, hey, they are worthy of this mastermind panel. So let me do that. Couple of decades in financial services. I started working in 1999. There I dated myself, and always SMEs and entrepreneurship has been a hot topic for financial services companies. So we will dive into that. I'm a partner with Start to Scale Consulting. We help SMEs and startups with funding, M&A, and things like that. So I just want to set the kind of intro for the topic. Obviously, UAE, we have become a fintech hub. And the region is obviously growing leaps and bounds. We talked about KSA and Egypt as well. And SMEs, they're the backbone of our region. A very sort of startling statistic popped by yesterday when I was doing some research. 93% plus of companies are SMEs, and about 7% of bank lending is directed at them. Now, there's various reasons, and this is not to put anybody on the spot here. And what can banks and fintechs do together? Fintechs obviously bring innovation, a fresh approach. Banks have the financial muscle, the regulatory compliance. Together, they can do magic, right? And that's what we will unleash from our panel today. We want to get a couple of questions from the crowd as well. So we will keep it crisp and nice, say 1 to 2 minutes for each question. Bear with me while I navigate this. Okay, so the first question. It so happens you're sitting at the right spot. So can you speak a little bit about Mastercard's role in facilitating a sort of ecosystem for fintech and banking partnerships? And can you give us 1 or 2 specific examples where they have helped the SME sector?
Thanks, Renjit. See you making me start. So thank you. Thanks for having me here. I think from a Mastercard perspective, guys, I look after the fintech partnerships business, and my job in particular is to lead a team that allows Mastercard to not just historically, we've always focused on banks, and for the past 50 years, we've built this franchise network of issuers and acquirers. But as we move forward, we've recognized that we need to move away from this monoline business into a multi-segment business. So thankfully, I look after this exciting segment called the fintech segment. There are other segments as well, like a telco segment and retail segment. But basically what we do is we look to enabling our fintech partners with our solutions, with our capabilities. At Mastercard, we've got close to 2,000 products and services. So it's about ensuring that we create APIs that are easily accessible for fintechs, because we want to become an API-first business, where from a fintech perspective, they're able to access our APIs very easily and embed it as part of their tech stack. How are we bridging the gap between banking as well as fintechs? We have various programs in Mastercard. I'll speak about one, and that is our Fintech Express program. Now, the word fintech is very, very broad. It can mean anything today, right? So what we've done is we've sort of sub-segmented the fintech segment. I know that's a mouthful, sub-segment. but we have various different subsegments. So what we typically do within the FinTech Express module is we take our enablement partners, your banking as a service type fintechs, payment as a service, card as a service. And what we do is we create an alliance partnership between these players and the banking partners. And that's what we call an alliance partnership, because the banking partner has the license. Okay, they have the ability to issue a card because they've got the license from the respective regulatory bodies as well as from Mastercard. And by forming this alliance partnership, any startup who wants to launch a card program simply comes to Mastercard, and what we do is we refer them to the enabler and to this banking partner, and this fintech startup can then launch a card program in a period of around 6 weeks. As simple, and I could speak all day about this, and I can see you prodding the clock. But there is just one example in terms of what we do, and the same goes to any type of fintech, whether you're providing services towards the consumer side, services towards the SME side. We have the tools, we have the capabilities to create digital inclusion, and most importantly, allow SMEs, allow consumers or consumer-facing businesses to have a level playing field with other banks to promote their businesses and use our tech stack, as part of their business.
Got it. Excellent. You mentioned the word partnership multiple times, so I'm going to switch around some of the questions and put Gonçalo on the spot a bit. You've seen multiple client assignments in the region where partnerships have a special flavor to them. Not all partnerships work. So fintechs and banking partnerships, what are sort of the key success factors? And maybe if you can throw in a no-names case study, we'd love to know a little bit about that.
Sure. No, I think it's definitely a relevant topic, especially because I think in the last 2 years or so, definitely with the increase in interest rates, I would say the way that banks obviously look at also fintechs in terms of collaboration definitely change because of the capital access, which is obviously very critical for fintechs. Again, I can throw a set of I would say criteria that we've seen I would say successful and also unsuccessful on these partnerships. I think the first one is I would say a clear alignment in terms of objectives. Definitely both parties actually needs to understand where actually they're going. Either if it's building something together on the customer experience side or in the efficiency side, but actually they need to be together. And again, I would say several examples obviously came to mind, but maybe giving you an example that actually didn't work, which is basically Wells Fargo's and actually Yold, which basically what they had in mind is two different things on actually going forward. And at the same time that obviously Wells Fargo wants to go into Lowen's platform, Yellow actually was much more concerned about that aggregation. So definitely having the same clear direction is important. I would say the second one, obviously, it's about understanding what you bring to the table together. Okay, so actually complementing strength, it's really important. And obviously we know that banks bring a huge, I would say, amount of clients, obviously the regulatory environment that they know very well, and fintechs, innovation, and so on. But obviously, understanding the two parts of what you're bringing it's obviously very, very, very relevant. Obviously, technology integration, it's key. So I would say it's a paramount of the success of the partnership. So actually assuring that technologies from both parties actually work, it will allow obviously to develop products that are seamless and they are aligned with the customer expectations in the end. I could give you more and more examples, but I think that these three are actually key for making it actually succeed.
No, absolutely. That's great. Now I'll throw one at Imane. So you're head of strategy at Paymob, and you've seen some of the the power that fintech agility and banking power, if they get together, what happens? So can you speak about how this can change the digital capability of the SMEs and and drive them to exponential growth?
Absolutely. Thank you for this question, Renjit. So one thing we have seen, especially looking at our home country where we started, Egypt, a few years ago, like the population and SMEs that are not getting any type of access to financial instruments, to acceptance, to any type of digitization to help them actually grow their business was tremendous. And one example that we were able to really showcase the power of partnership between banks and PFs is the partnership that we have built with Bank Misr. So Bank Misr in Egypt is one of the largest acquirers. They were number 3 in the country, and thanks to the partnership that we built together, they were able to push their reach to become number 1 or number 2, depending on the months. But essentially, like the biggest thing that we are able to leverage is the strength of banks when it comes to robust systems, when it comes to access to structured information about markets, but also for payment facilitators and fintechs in general to do the legwork to go to the bottom of the pyramid. Because the cost structure of banks cannot allow them to go that low when it comes to merchant size. And this is something where fintechs are really strong at because the economics are different. The way we are able to reach those customers is different. The language is different. KPIs are also different. But when you combine that with the robustness of a banking partner that actually understands what is the value that can be brought in by digitizing SMEs is extremely powerful.
Yeah.
And by like enabling that to start with, we can start opening up the access of the bank to actually cross-sell their products and services to a now onboarded, KPI'd, very big pool of SMEs, which was not the case before because they don't know them, they cannot access them.
Yeah.
So we, fintechs or PFs in general, and Paymob did that in Egypt very successfully, and we're scaling this in Pakistan and the UAE, is to get them on board, know their business, enable them with very strong acceptance products so you know their volume, their data, etc. And you can start cross-selling in partnership with banks, financial instruments, lending products, and so on and so forth.
I think good that you said about cost of access, right?
Yeah.
I just want to bring Rohit in. You know, traditionally we used to say, hey, the cost of underwriting and accessing and onboarding these SMEs is going to be very expensive, right? And so are these fintechs providing that bridge to kind of make it easier to access this market? And you know, and also one sub-part to it, and I don't know why I do this, I have 2-part questions, but you know, usually when we talk about fintech and banking, it's about should we collaborate or should we disrupt, should we partner or should we do something else? I just want to hear a banker's perspective on that as well.
Thanks, Renjit. Privileged to be here. Look, let me answer your second question first. I think the whole paradigm of competition versus collaboration changed a long time ago. So I think everyone's trying to collaborate, partner, and I think that's the name of the game. See, banks are a regulated institution, and a lot of our cost structure is due to regulation that we've got to adhere to. And you want that regulation because you want your money to be well taken care of. What we are not very good at, or traditionally what we've not been very good at, is customer experience. Yeah. And I think that's where fintechs have really brought in a lot of expertise. They understand the consumer as well. They're able to make experiences which are very, very simple to understand. And we would love to collaborate with them. And there are multiple success stories around it. I think the other thing is fragmentation. So banks are a one-stop shop from A to Z. If you're a full-service bank like Emirates NBD is. And fintechs are specializing in certain areas and bringing in that bridge that you talked about. Whether it's consumer experience, whether it's customer centricity, or whether it's last mile consummation. So large lending can be fragmented, and they're building that bridge where cost of distribution for the banks is much, much low. So for us, cost of distribution is high because you all want branches at high streets, and the banks have to pay for building those high street branches. But fintechs are, fragmenting it and taking the leap and bringing it to your phone. Yeah. And that's why they're able to make the last mile connectivity, which as banks we are very, very keen and welcome it and partner with them.
Thank you for that. Last but not the least, at least in this line of questioning, and we'll then open it up to the panel to talk. So Malik, Monz AI, I know I spoke to somebody from your team and he mentioned, AML and KYC as some of the focus areas, and you're based out of KSA. So, I'm going to put you on the spot. How has it been working with the banks? Tell us the real story.
Okay. So I think with banks, a lot of the banks, especially in Saudi Arabia and also in the UAE, are looking for ways to modernize their infrastructure to move away from the monolithic applications to API cloud native applications. So we're seeing a lot of, let's say, the traditional banks that are migrating to cloud-based infrastructures. At the same time, we see a lot of the challenger banks, the little digital banks that are coming in and trying to disrupt the digital or the traditional banking models by relying totally on cloud infrastructures and SaaS-based services. So from that aspect, we see a lot of uptick in the traditional banking sector as well as the traditional non-banking sectors. Of course, fintechs and neobanks and digital banks are the pioneers in this space so far. We're talking about more than 60 regulated financial institutions overall that are using our APIs today across the region to make sure that their customer journey is safe, compliant, using a modern architecture stack.
Okay, perfect. I think you handled that very well. So I just want to open it for a couple of folks to chime in from the panel. So what can fintechs and banks do together to specifically support the SME sector, the entrepreneurship, movement that we've got going on in the MENA region? Maybe, Mohammed, if you can kick us off, and then I'll get some.
Sure. So I just want to touch on the regulatory piece as well, or should I say the partnership piece, because what we typically see, or what we have typically seen, is that from a banking perspective, I like to call it the 3 C's. So when we approach banks to say, let's collaborate together with fintechs, because we really see ourselves as an ecosystem enabler. We as Mastercard, we build ecosystems. But what we typically see with banks is that they look at the 3 C's. When it comes to partnering with a fintech or an SME, it's the cost piece. So what would the cost element be for the bank?
Yeah.
Number 2, it's the compliance piece. So,
Yeah.
To your point, banks have this license and they're answerable, to the regulatory bodies. So from a compliance perspective, they need to understand exactly what are they in for by, extending their license to a fintech or to an SME. And the 3rd C, which I think it's no longer there, because I think everybody knows that they all have a role to play in creating a digital economy, and that's competition. So a lot of the times the banks would say, if I enable this fintech, what would I be doing to my existing business? And so the competition element has been there for a while, but we're starting to see that C move from competition to collaboration. So that's changing, a lot. From a Mastercard perspective, specifically for SMEs, we've got this vision, and we've actually pledged that by 2025, we want to bring into the digital economy close to 1 million SMEs. Okay, sorry, excuse me. It's actually 50 million SMEs that we need to bring in. And most importantly, we've gone as far as saying that 50% of this must be women SMEs, because women SMEs are really a catalyst for economic growth. Now, SMEs face so much challenges on a day-to-day basis. Access to credit, access to data, infrastructure challenges. And all these things are challenges that they face. And we're really working with partners such as Paymob, partners such as other banks, to create these SME-in-a-box type tools that give these SMEs a level playing field. So when it comes to them, servicing their customers, they have these digital tools that allow them to create an equally digital inclusive and financially inclusive world.
Okay, perfect. I just want to bring a couple more, Gonçalo.
I can give you a little bit of perspective of KPMG. First of all, I think it's clear for everyone that the SME and even the micro segments of enterprises are underserved in these markets that I would say worldwide. Yeah. So access to credit is very, very difficult, which obviously takes a huge challenge for these SMEs actually to perform. in KPMG, and giving you a little bit of a perspective of eventually the last year, or the last 2 years, actually we've been seeing a movement on looking for services on licensing, especially on, I would say, fintechs related to SMEs. I would say what we're seeing is that more and more, and obviously I think there are some players here in the region that actually fuel the opportunity, like I would say WIO, that actually came to the market as a specialist for SMEs, and obviously these opportunities are there. I can give you a little bit of perspective that almost every week we are talking with investors to actually support them on the market entry strategy, either for CBOE, either for the IFC, either for ADGM. We're actually having these conversations almost one time every week. So this actually means that the market is, I would say it's, yeah, definitely. And again, it's not only about looking for the partnerships and the collaboration, is actually bringing real new and innovative solutions to the market that I'm sure that banks definitely will see this as complementary.
On those innovative solutions, SMEs are generally thin credit, right? So you mentioned telco there, and so I thought alternative credit models. Any thoughts on that as to the maturity of the alternative credit models, Imane, and then maybe Rohit?
Like that's something we were experiencing with for the past couple of years. Right partner from the banking side, we were able to solve for the biggest issue of SMEs, which is the access to credit for them to be able to actually grow their business. And in the current regulatory environment, it's very challenging to be able to assess the viability of a small business. So with regulators and with banking partners, we were able to think of different ways to be able to score them, to be able to assess their capacity to pay back. Yeah. And thanks to us and other fintechs in the markets being able to digitize such a big pool of SMEs, we're able to leverage the acceptance data, bring it in with the credit scoring models that we build as fintechs, and combine it with the balance sheet lenders, being banks in most instances, and find new ways to be able to extend working capital, to extend bullet loans, to extend access to finance that will be the springboard, and that's something we have been seeing over the past year, to these SMEs to actually thrive and move from being small to medium and so on and so forth. Perfect. So like that access to data with the innovative way to try and find a solution to a big problem that exists even in countries like the UAE, lending is the biggest challenge and opportunity at the same time.
For sure, it's an opportunity. Looks like you're ready,
Yeah, and just to add a little bit more of the Saudi context and Muslim-specific context, SME financing is probably one of the most important elements in the FSDB program under Vision 2030, the Financial Sector Development Program. And what we see a big potential is in using non-traditional data sets to assess creditworthiness of SMEs. So what we've been working on with the open banking sandbox and with the open banking, with the banking players and the non-banking financing entities is how could we leverage open banking data to digitize onboarding, as well as to do better affordability assessment for the SMEs. So we're enabling financing entities, financing fintechs to do on-the-spot credit assessment using open banking data.
So look, we've got to differentiate between what is the startup financing or VC funding or risk capital or whatever you want to call it, and SME financing. Yeah. And funding for startups is opening up dramatically. That's not SME financing. Yeah. So we've got to differentiate between the two. That's one. Second, I think SMEs face two problems, or at least the S of the small business faces two problems. It's not only access to credit, it's access to banking itself. Yeah. Yeah. So the time taken, I think the biggest issue is the time taken to find a banking partner. And I think that's where a lot of work is happening across the industry. The way we get the data. So banks are now tying, or licensing authorities are now ready to share their data. Banks were always willing to talk to them. Yeah. But now they're willing to share the data. So that whole process of account opening is getting hurried up. The way you authenticate the data. So people who opened entities and are traveling, now they can authenticate while not being in the country. Then the way you authenticate the data, get all the surround data, etc., etc. Yeah. How do you authenticate identity? Yeah. How do you extract data to make sure that you can open an account in half an hour as opposed to half a day? These are, and then obviously robotics at the back end to make sure that you can actually turn around, give you the account number in half an hour. So that's on the access to banking, and I think there are multiple examples in the market now where customers are getting access to banking in a jiffy. However, we've also got to make sure that when you're looking at an entity which is a BVI company which has got 10 layers and has 20 partners across, and these are all live examples. These are 20 partners which are, half of them are not in town.
It will take time.
It will take time because it's a high risk account. Okay. But if it's a simple in-country 1 or 2 partners, I think most banks are able to turn it around much, much faster.
Yeah.
Access to credit, separate story. I think access to credit is as good as how bankable the obligor is. Yeah. But there is alternate credit models where I think lots of new entities are coming, new fintechs are coming, and banks are working with them.
Yeah. So that's good. Now, I think that's a very good spot to actually open up a few questions. We've got 2-3 minutes, so maybe fastest hand going up gets the mic to ask question. There you go.
Thank you very much.
Please introduce yourself and then.
Thank you very much. My name is Ignacio. A question for the whole panel. Who do you think is better placed to serve the Gen Zs? You touched on security, and I'm talking more about user experience, also about security vis-a-vis the traditional banks versus the fintechs.
The question of Gen Zs.
I'll take it. Do you want me to say Ziwa? So I think from a Gen Z perspective, and from a Mastercard point of view, we firmly believe that embedded finance is where you need to be. You need to be where your consumers are. Gen Zs in particular are all over social media. So you've got to make sure that you tailor-make solutions that are easily accessible, specifically on the mobile phone where the Gen Zs are. And we have some good use cases. We have some good examples of that, where we've seen good growth of fintechs, specifically a fintech like Ziwa, who's been in this market now for at least a year. They're a Mastercard partner of ours, and they're definitely going after the Gen Z market. And their growth has been over 50% month on month. And just the way in which they are revolutionizing banking and providing and serving that specific Gen Z market has been astounding. And we've been watching them really closely. And I know why Ignacio's asking that question. He's been also very close to Ziwa. And it's something that we're proud of because it's very different to what traditional banking happens or how traditional banking happens. And I think that they're onto something. And like I mentioned when I started, embedded finance is definitely where we see the game changer in that space.
Yeah. Thank you. I think we can get one more. We got about 1.5, please. And this time a non-Gen Z, Gen X question, please.
Gen X. What's before X? I'm forgetting. So Rohit, you mentioned the ecosystem for credit assessment being a lot more automated or digitalized. We see in India the kind of ecosystem that's there where a loan origination system has at least 40 to 50 API integrations, and practically everything that you need for approval happens within minutes, not hours, right? So where do you see the Gulf in general and UAE in particular in terms of having that type of digital financial ecosystem where you really don't have to ask for data, but it's available through API integrations across the entire gamut of what's needed to approve, say, SMA loans?
Thanks. So look, as a bank, we are 100% cloud native, and we are 100% API connected now. So the infrastructure is ready. I think the enabling infrastructure needs to come through. So for example, the credit bureau needs to be API connected, yeah, because that's an important part of the ecosystem. Yeah, your financial statements need to be ready to be pulled. So it's a collaborative infrastructure. I don't think we are there as yet, but most banks and supporting institutions are talking. It's still some distance away, but like I said, the enabling infrastructure is getting ready and people are talking. I belong to that time where there was no credit bureau. So in panels, I've also had questions where people have said, look, why don't banks lend? And my counter question is, would you lend money to somebody who's just come into the country, you have no idea about, and if it's your money, will you lend it? Well, banks is also using your money. Yeah. So now there is a bureau, there is a lot more enabling infrastructure. And we are waiting for all the fintechs to sort of break through in this, and we will look. And last thing, your question about who will serve Gen Z, I think it's all of us who will serve Gen Z. There is no specific entity or kind of entity which will serve Gen Z.
Yeah. I know we are out of time, but we'll give you a final.
I think your question is very relevant. It's more looking to the future and a very relevant one. Maybe sometimes it's important to look at other markets and actually what happened in terms of open, let's call it open banking. So if you look at the UK and also European Union with PSD2, those are two, I would say, examples that were mainly regulatory driven. So basically banks were mandatory to share information in a certain, I would say, structure with security rules and so on. What we're seeing in this part of the globe, I would say it's a mix, but definitely what we saw in Europe, in the West world, actually show you that when you actually make banks need to comply with that, then you actually can generate a lot of innovation, an ecosystem that can grow much faster and bring new solutions. We're seeing here a mix of reg-driven but also market-driven. I'm much more a market-driven perspective. I think it fuels much more innovation, bringing new products. But I think the next, I would say, year or so, it will give us a little bit of a glimpse what's coming. But definitely, I would say that it will be an hybrid of what we're actually seeing in other parts of the world.
Perfect. Very good. Please give a huge round of applause to our distinguished panelists. And sorry for taking a little bit extra time. Thank you very much.